Welcome aboard, everyone, to a new session of charting across the board. Today, we're going to navigate over the dataset in the price action for the S&P 500 as we have the time price opportunity, the TPO chart, that we are going to add as a confluence based on our harmonic ratios. Nothing new, only adding time as well as volume profile, basically. I'm going to double check the levels very briefly to make sure everything is running in the background before charting across the board and potentially maybe trading if we have an opportunity, okay? I have a chart synchronized with Trade of 8. Therefore, we can potentially use only trading view for our execution before switching from other charts, okay? To start with the price action on the chart for the S&P 500. Sorry, I'm looking for my chart here on my screen. On my end, I have different chart here and screens. Here, this one. As you guys can observe, we are bouncing from the time, the intersection between price and time mentioned on the previous stream, I believe it was last week, okay, that if the support level was found either at the 0.61A, which indeed we tested, as well as a 50% of what? Of that W formation, a shark pattern that also present as a precursor of a bullish continuation structure, meaning that after finding resistance at the D point at 6,008 points, prices should ideally retrace no farther than the 0.618 from these legs, from the C to the D, retest as support, as a confirmation low, as well as a 50%. These are the key support levels before heading higher. What occurred? Support was found at the 0.618. Keep in mind that this is only based on minor time frames, short-term trends, starting on the 15 minutes, as well as the 30 minutes and the hourly time frame. I do like the 50 minutes to zoom into the 30 minutes as well as the hourly time frame, okay? So where are we heading next, my friends? Where is the S&P heading? You guys can observe already another formation, a W formation, an early identification pattern looking now in this segment of the move. The idea previously for the previous stream was to find support either the 50% or the 0.618, where we indeed follow those support levels. Also, between the intersection between price and time that occurred last week on Friday at 1 p.m. I like the confluence of the time intervals finding on minor time frames. They're pretty accurate to find or act as pivot points, pivot lows in this case. The first one, the test, 1 p.m., the lows, the confluence with 0.618. The following after was or occurred yesterday at 10 a.m. in the morning, the new support. The next one that is coming through or is approaching now is today at 8 p.m. That will be within the Asian session. Now we are within the New York session, heading into the closing at 4 p.m. Of course, we're not going to do an entire stream up until then, but we're going to present the levels where the new resistance levels may be found after testing support for the shark pattern turning into a 5-0, which is a continuation structure, at least within the short-term trend, where opportunities were indeed presented here at these lows and the next one. We mentioned before that we're going to be focusing, at least in the short-term trend, for trading opportunities only, okay? Our main project or our main idea continues to be for swing trading strategies based on the daily time frame as well as a weekly, but we understand that there are opportunities also presented daily on minor time frames starting on the 15 minutes, okay? We are entering the initial balance in the next 8 minutes. We mentioned before that the first hour of the session, in this case, the New York session, represent the initial balance, where we have the trading range, where the majority of transactions occur, ideally, institutional activity. Therefore, the next level that I'm tracking, you guys already know I like to be two steps ahead prior to the move. After finding support here at these levels, you guys can observe that we have a downsloping trend line, okay, that can also be identified as the dragon, the spine, another harmonic structure that often present as an early identification pattern if they break higher, of course, to have the next leg of the move for either a cipher or a bat or garly pattern. In this case, before these data points, the previous higher high presented yesterday and also the higher low printed yesterday, both of them were presented in the 30 minutes that I was aiming to these levels, okay? This chart is from yesterday based on the 30-minute time frame. You guys can observe that we find support at the C leg of the move. This support came right here at the 50% correction after the intersection between price and time that occurred at 10 a.m. However, as we are moving or nearing also the deepest areas of retracement, the point 786 at 59.75 as well as 59.90, these are the potential turning points that I would like to see the intersection between price and time also occurring for today at 8 p.m. Okay, as we have price retracement, as you guys can observe, the support indeed presented from the highs to the lows. Okay, the previous lows to the highs in this case, apologies, lows to the highs, key support levels 0.618 occurred also 1 p.m. on Friday session, and also the 0.50 as a higher low than the previous low. Therefore, an uptrending market is presented now in the short-term trend once again, as we're printing clear market structure of lows and higher lows. Okay, we got the lows, higher lows on the lower part or lower boundary of this channel, as well as the upper boundary for higher highs. Okay, so the next one, potentially a supply zone at these levels, also the previous value area high from Thursday. Okay, we might retest those levels, but let me present what those arguments are before jumping too far ahead of what we have in the price action. Okay, I hope each one of you are doing great and following me here with this technical proposition that doesn't represent any financial advice, but rather an interpretation of the technical information. Okay, once again, the support levels. Okay, we have the intersection between price and time yesterday in the short-term trend, once again, 30-minute time frame. That was a chart from yesterday. The idea was if the support levels was found here and also after breaking the neckline, the spine of the dragon, then the projection was to head into the 0.786 that we're approaching now as the first resistance levels, 0.786, the 0.886, as well as the 100%. Either of these levels should act at least as resistance within the short-term trend prior to building a new higher low, okay, than the previous low. So therefore, applying this harmonic strategy, we are nearing now the 0.786 at 59.75. This is the first test. You guys can observe here, we only have, or I only anchor the B point here. However, there are two confluences that I'm now monitoring. This one was the only data set in the price action I anchor for, once again, the B point for an early identification structure of a pending bearish bad pattern in this case, okay, at the 0.886 initially. However, the 0.786 is also marked here at the 59.75 for potentially a pesadento garly on the 30-minute time frame. Okay, so now moving back into the current information, this pattern is from yesterday, now manifesting into this leg, the C to the D. Major opportunity for a short-term trend. Okay, therefore, here we are in the price action for the S&P, nearing or at least heading into that turning point. Ideally, this is a B point that I mentioned. This is all the data set I had yesterday, okay, from Friday session, from that lows as a B point, the C point, and now can we aim the 0.886? You guys let me know we're heading into that direction. However, to make a new adjustment of a new information based on new interpretation of the market information is a B point, okay? Here previously, we did not have any other information into this right side of the wing of this pattern, okay? Or the right wave, I should say. However, now we can also anchor the previous higher high than the previous high, okay? So this new information that we did not have yesterday can also be computed, or can be also be computed into the new information for potentially a Gartley pattern that we're nearing those levels, okay? We're nearing now the first test at the 0.786, okay? So therefore, these levels now become a key level based on harmonic structure for potentially a turning point within the short-term trend. Once again, 0.786 approaching, currently testing or trading at 59.70. We're approaching by 5 points. We're nearing those levels. How will the risk management be, or how would I approach this pattern? Okay, ideally, I would like to see a first test into the 15 minutes, considering that we are moving into minor time frames. Okay, therefore, depending on the reaction, the reactionary move of this test at the 0.786, 59.75, I do know that this represents a turning point, not another word that I had in mind. The turning point for the 0.786 represent the PRZ, the potential reversal zone of this Gartley pattern. Once again, keep in mind, I did not have this information yesterday. Okay, that was printed, I believe, yesterday in the afternoon, but in the morning, that B point did not exist. Okay, only to make that argument. Why? Because once again, previously, I only had this projection for a bad pattern. Okay, at the 0.886, 59.90. That would also be the deep Gartley if we go higher than the 0.786 at 59.75. However, this point, this turning point, represents the first level of resistance. Okay, if we anchor the Gartley new information at the B point using the higher high than the previous high. Okay, the higher high than the previous high. Once again, as we're approaching the turning point, I would like to see the reactionary move, okay? Therefore, if I can execute, as an example here, we can provide an example here, setting a limit order, okay? That will be around, my limit order will be at the PRC, okay? Ideally, 59.75. However, this pattern can also present overspill that can range to the 59.84, even all the way to the 59.90. Assuming we're taking or executing a trade here at the first test, okay? That will be my first test of the move. And my profit taking levels, the TP here, will be from these legs, from the C to the D, applying short-term trend, okay? Once again, keep this in mind, very important, my friends. From the lows to the highs, which one will be my profit taking levels on this short-term trend trade? The 0.382, 59.50, that will be 25 points, at least $1,000 on the E-minis, the standard contracts, or 1/10 of the value of 1,000 will be $100 if we trade the micros. Okay, not the ES, but the MES. Therefore, my first TP for one contract will be here. Whoops. This will be my TP will be in a short execution in this case at the 0.382. Okay, that will be my first TP with a projection of $1,000 for the first TP, and depending on the rejection also, we can go lower and aim for the 50%, 1,500, the 0.618 for 1,700 or nearly 1,800. Therefore, which risk to reward ratio should we apply? If we risk, in this case, $500 for this trade, okay, using a $500 risk in this case, that will be a 3-to-1 almost, right? We're risking 500 to make a little over 1,500 will be 3-to-1. However, we can also apply the micros instead of 500, it can be only $50 to aim for 150 or 117 in this case. Let's use 150 for a proper 3-to-1 ratio, okay? That will be my profit taking levels. 2-to-1 will be, of course, at the 50%, slightly lower. 100% will be 2-to-1. And of course, 1-to-1 ratio, is that even profitable? I don't trade based on that risk management, but 2-to-1 will be ideal, right, on a short-term move. But 3-to-1 is what is considered for a profitable execution, ideally, to be consistent, okay? If I put my limit orders here, it will be not a buy, okay? Huge error here. Mark, pay attention, it should be a sale, right? An execution at the 0.786 right here. We can either enter slightly premature, right? 59.74 instead of 59.75, or depending on each trader, that will be optimal to them to adjust accordingly. Assuming I enter here at 59.76, right? Execution, my TP, profit taking levels will be at the 0.382, $1,200. If I'm risking 500, stop loss, $500, okay, or 300, that will be at 59.84. I can execute here my short position, okay, as an example, okay. I have a sell limit now at the first reactionary move, ideally a turning point at 58 or 59.75, okay. Depending again on the reactionary move, I normally like to first see the reactionary move before heading into the next deepest areas of retracement and get these $400 blown, okay? So therefore, we're gonna be patiently waiting at least a first test of the 0.786 before the execution, okay? Let's monitor. Why? Because we do know that there are many attempted rallies or many attempts to break higher. Also, this is where we look at the momentum indicators, okay? The momentum indicators on the 15 minutes, extremely overvalued. You guys can observe here, currently trading at 82 level, which is extremely overvalued on this particular time frame, okay? This doesn't mean that the higher time frames are potentially heading higher, but in the short-term trend, once again, we're entering overvalue conditions where the risk to reward ratio should be ideally in our favor. Ideally, in theory, okay? So now that will be the 15-minute time frame. Potential execution, 59.75 over spill to 59.84. That's another 9 points, $500. That will be $1,000 risk. This is why trading futures can be a little complex when it comes to the risk to reward. You can also trade micros. It gives you more room to trade more, right? Instead of $50 or $500, you're risking 50 and so on to make 150. Or you can apply trading stops if the price goes into your favor and we go much lower, okay? Once again, 15-minute time frame, overvalue conditions. The 30-minute time frame also presenting here overvalue conditions, okay? So I may execute here. Let's see. I can potentially put here an execution. However, we do know that the 0.886, okay, is one of the complex ratios. 0.886 can be a tricky level to short. Price may go to that ratio and then turn, okay? Once again, this is all based on short-term trend opportunities, okay? However, the variables that I observe is overvalue conditions. That gives me a lower risk area for a short opportunity to aim these potential profit-taking levels, short-term trend. Now, let's move into the hourly. What is the hourly suggesting? Also, overvalue conditions, 86. Extremely overvalue conditions. I'm feeling tempted here to execute a short 59.75, but I would like to see the first reactive move. Did we test it already? We're nearly those levels. This is where I normally use my alarms, right? Before this move, of course. You guys can observe that it was previously lower. However, now we have new information and I'm adding here prior to retesting the 0.76 at 59.75. As we're coming closer to these levels, I would like to monitor once again the 15-minute time frame. I know, my friends, this can be boring, but This is part of the risk mitigation measure that I normally apply behind the scene before going into another charting application on another window. In this case, BTC. I would like to also mention the levels I'm tracking on the short-term trend also, or the next intersection between price and time that comes this Sunday, the 8th, okay? We mentioned also that as long as we're not breaking higher than the previous high at 112, I'm looking at the next intersection for price and time this upcoming Sunday, the 8th. Okay, the first intersection, as long as we're not breaking any higher, the following after will be Thursday, June 19th. And the following, of course, depending on new information, do we bring new highs, new lows, we'll see. As you guys can remember, I'm sorry, I'm running out of breath here. As you guys can remember, this pattern is basically a larger time frame on the daily, but similar to the S&P 500 in the short-term trend, applying the hourly time frame. This pattern right here, okay? The one on the left, prior to the support levels at the 50% and the 0.618 as continuation structure. Therefore, in a similar context, Bitcoin, for a true support, at least in the long-term trend, a daily time frame that takes longer, the ideal support would be to test the 50%, 93,321, as well as the 0.618, 88,000 potentially, okay? Only if prices go lower to these levels and find true support and bounce back in the same manner as the S&P did here in the short-term trend, okay? Let's remove the Garley pattern here, only to expose or to illustrate the idea behind this formation. Rejection at the 100%, support at the 0.50 or the 0.50, okay? Or the 0.618. Similar context for Bitcoin. What I did notice only this morning or yesterday, I believe it was yesterday afternoon, was this segment of the move, okay? Nobody can assume here that was an information. However, if we zoom into the 30-minute time frame, okay, that was indeed another information, okay? I believe it was the hourly even, now the 30 minutes. Yeah, the hourly. It has a better symmetry, okay? You guys can connect the harmonic ratios and observe that we are indeed bouncing from where? From these lows to the highs, either at the 0.886 or the 0.786. An information, either you can say a BOT or a Garley. Let's see, if we apply our harmonic ratios, we're bouncing from, if we anchor from this low, okay, this one gives us a proper ratio, data sets for congregation of harmonic ratios. Okay, we are finding support, or we found support at the 0.886 in this case, 103. If we anchor the lows to the highs, back to the lows. This is normally a key information within the harmonic framework. Why? Because it gives us a 50% correction that ideally aims towards the 0.886. That was indeed the case here on BTC. First reactive move known as the type 1. Type 1, potentially if we zoom into the 4-hour time frame, this also could be perceived in the 4-hour, okay? That can be, yeah, that can be a 4-hour symmetrical formation, okay? Reactive move on the 4-hour, 0.886, bouncing from 103 to current levels, nearly 3% move. That can also be interpreted as a short-term trend, okay? Do we have another W formation in the early formation? Potentially, okay? Therefore, another W will be identified here in this segment of the move now, this quadrant, okay, on the price action for Bitcoin, these levels, potentially up until Sunday the 8th, we will see. It's only a projection, okay? Moving back into the 30-minute time frame, let's see the hourly. Let's move into the hourly. Would like to see if we have an early formation, early identification structure based once again on this particular time frame. If we apply the highs, 112, back to the lows, the B point, we can apply either the 0.382. This one will potentially trigger a higher level, right? An alternate bar pattern that goes to the 1.13. Okay. However, if we apply, let's use this one as a discernible low, 0.382. Okay. This one, my alarm on the S&P is being triggered. Okay, my execution hopefully still there. I think I placed some limit orders, but let's go back there. Why? Because we want to see the first reactive move first. The next PRC on BTC, this price can navigate all the way towards the 0.886. Okay, that will be the completion point, pending completion point at 109. Okay, 110 even. Okay, however, based on this B point, depending on the reaction move here first, I will then aim for the 1.13. That will be slightly high than the previous high, or at least a retest of the previous high. Okay, why the 1.13? Given the ratios here at the B point, this is yielding an opportunity to the 1.13 if we go to the failed wave, which is the 1.13 between the legs X to A. I know this may sound complex to those who are not familiar with harmonic structure, but it's all data set with the price action that I believe the algos are following this cyclical rhythm, okay? The sine waves of the move among short-term trend and also long-term time frames, okay? The most immediate time interval will be once again the 0.886, 109, 110 over spill to 110 and 555. That will be a resistance levels on the hourly. Also, if we go into the momentum indicators to add confluence, we can observe that the RSI, the relative strength index, is also yielding or printing over value conditions. We'll see we have some type of divergence here, okay? Higher highs in the price action, lower highs in the momentum indicators. Let's move into the 4-hour to see another confluence. There is no divergence here, rather convergence almost, right? We're seeing, unless we go into a daily here. Yeah, no, there's more room to go on the 4-hour, on the daily. However, the 4-hour, if we anchor this high, we're pretty slow. These are converging, not divergence or diverging. All right, everyone, these are basically the levels on BTC moving into the short-term trend. On the daily time frame, the shark pattern remains there, okay? But I believe we also mentioned that this shark or this pattern can also range to the 1.13. Therefore, the key level here will be the first test, 110 and so on. And depending on the new information that we get at those levels, we will reassess, okay? Something to mention here is that the shark pattern in this case also can range to the 1.13. This is known as a failed wave, only in the event of a nap thrust, okay? That will be 1.13 also, coincidentally with the 1.13 between the legs X to D. You can observe here the 1.13 is only a Fibonacci retracement from where? From the highs to the lows. Simple as that, my friend. Highs to the lows. These represent that ratio, the 1.13. That should be around 113 over spill, potentially 115. But we'll see if we breach the previous all-time high at 112, okay? This will be on the daily. We're cognizant that prices can still navigate slightly higher, assuming the 1.13 can be tested, okay? However, short-term trend, we know the levels, 110, 109, that should be a level to be monitored on BTC. Going back into the price action for the S&P 500, you guys can observe here, we tested now, fully tested now, the 0.786 at 59.75. Some resistance is being perceived now with a decline of 2 points. That is absolutely nothing, right? We do know that this is not a scalp move, right? However, scalpers, of course, can also take opportunities on these type of moves. In and out, like a nightclub in Amsterdam. Jokes aside, 0.786 once again becomes resistance. If we go slightly higher, we have the 0.886, 59.90. So therefore, these are now the levels I would like to use a TPO. Okay, you can observe here, this is the volume profile that the previous value area high There was a resistance levels here. That was a weak high at the 6,000. Can we go and retest those highs? Absolutely. Normally, this acts as a magnet, either at the highs or at the lows for support and resistance, supply and demand, right? Same terminology, same interpretation, basically. And depending on these levels, on the reactionary move, we will then see if the higher levels at 6,100 can be tested. Why? Because if we now move into the 4-hour time frame, okay, moving accordingly into the 4-hour time frame, I'm going to hide my indicator here. I do know that after testing the support level, okay, at the 0.618, this can yield another reciprocal ratio that can navigate from this leg, from the lows to the highs. The 0.618 yields an extension to the 1.618, okay? That will be at 6111. But again, my friends, remember we're focusing steps by steps. The first one will be the reactionary move on minor time frames. There is only minor rejection. We do know the price can navigate to the 1.618, okay? The extension on that idea will be another interpretation, an early identification structure that I charted yesterday based on the short-term trend from the lows to the highs, 200 points. It seems minuscule, but once again, on the futures market, this is extremely significant. 200 points times 50 equals $10,000 for one trade. This is why I would like to give also more emphasis on the 15 minute and 30-minute time frame, also without disregarding our swing trading strategies that are based on the daily time frame. Okay, and these levels here, keep in mind the 1.618 at 6104 also comes into confluence with a larger formation. Okay, all of these are based on minor time frames: 15 minutes, 30 minutes, 30 minutes, and the hourly. Okay, but we are also aware that on the daily time frame, we have the 0.886 still as a level of resistance, okay? Level of resistance from the previous high to the lows. One second, my friends, I'm deleting some chart here. Hopefully everything is running in the background. I have no idea, but assuming everything is running properly, we do know, okay? I'm going to delete the data set on minor time frames only to portray the main correction, the main reset. The full reset will be anchoring the Fibonacci ratios from the highs to the lows, the 4,800 region that caught many out of guard. Why? Because the execution or the technical proposition by many was to all-time high from here levels, or from these levels here, before nuking to 4,800. Okay, now, of course, significant substantial move, recapturing pretty much more of that decline from 5,900. That was also from March. 2 months later, we're still here. Okay, so therefore, we are aware that the 0.618 is also a ratio for the pending bearish bad pattern. That in theory, they should yield a larger decline, a more significant decline of a bigger or larger magnitude should present at the 0.886. Okay, we know that we have some potential trade opportunities on the minor time frames, but based on the daily time frame, of course, this will be the last leg of the move to be challenged on the S&P 500 before heading lower. Okay, this is a major pending W formation, a Garley, or also interpreted as a new research based on Scott Carney for a bearish bad pattern at the 0.618. Overspill of the 0.618 will be 6,068 or 6,100. Okay. The previous all-time high, also looking left, market leaf clues. Previous all-time high was traded at 61.66. Therefore, this is a true test, a true penetration of either a rejection of this overhead resistance that we have been trading within this move pretty much since the second week of May 19th, correction, but we do know that the more we remain at these levels, the higher the chances potentially to either backtest the previous high or to break higher. We will know, my friends, we don't have all the crystal ball. All we can say is that we navigated the entire move from the lows in 2022 up until this move, major correction, major absorption of the selling pressure, and now we're backtesting or nearly backtesting the previous all-time high or the previous high from last year, 2024. That lasted pretty much up until February of this year. Everyone, once again, 15-minute time frame. This is where I would like to see a rejection. We can observe already a minor rejection here. A candlestick pattern is being printed in the next 6 minutes. This is a doji, either portraying indecision as well as a potential turning point, okay? I can see another confluence here. If I anchor this leg of the move, these lows to the highs, once again, short-term trend. The 50%, this should be a 200%, potentially higher if we go any higher. But if we anchor this low here, 50%, yeah, that may coincide with the 200% at the 59.90 even for the 0.886 on the 4-hour. Just to keep in mind. But so far, this is a rejection I would like to monitor, okay? Why? To mitigate my risk. Because to me, we're entering overvalue conditions once again on minor time frames, okay? To execute a short here, cross my fingers, close my eyes, and move along. We will see, okay? Let me close this session first. I'd like to see the closing of this candle in the next 5 minutes. As we wait for that correction or for that close of the candle, let's see if we can chart one request for our friend Jarvis, one of our members in our group. Okay, let's go. He requested earlier Palantir. I haven't checked Palantir in a very long time. That was supposedly the next NVIDIA. Would that be true? I do not know. I never know anything, basically, right? What do I know? All right, let's see what Palantir, not NVIDIA. Palantir is extremely high here, my friends. Pretty much a parabolic rise, right? If we look at the higher time frames, let's move into the weekly time frame. Extremely parabolic move, exceeding the 2.618. The 2.618 is basically the last leg of the move. We haven't overspilled previously of the point of the 2.618 before that major correction. That was from the 2.618, 40% move. That was a massive decline only from the 2.618. However, from the main turning point, 125, there was a decline of nearly 50%. Wow, that was a massive decline. However, recapture printing new all-time highs, currently at 134. There was some news earlier this morning. I saw some data breach or something along the lines on Palantir. I need to probably dig deeper and see what's going on there. However, I don't take the fundamentals into my execution, only to know what's behind the noise, okay? Moving into the technicals, once again, we do know that the weekly presenting divergence here, slightly divergence, okay? Higher highs in the price action, still early, and lower highs in the RSI, contradicting variables, suggesting a potential turning point, but we will see, my friends. We do know that we may have into the monthly time frame that may suggest higher levels, extremely overvalued. The monthly time frame is extremely overvalued. I do believe that at some point we're going to see we have to see a correction, right? Except that, of course, overvalued conditions can remain longer than we can stay solvent, as a quote go. 97 level on the RSI, extremely overvalued. However, also, we pay attention, we started entering overvalued conditions on the monthly pretty much on July of last year, right here at the lows. Therefore, if the interpretation, or the fear mainly, was, oh, we are within overvalued conditions, then this move alone was a significant amount of money to leave on the table. Okay, so key level here. Let's move into a daily time frame, short-term trend. I see a W formation here. If I delete the levels, I'm also paying attention here, my friends. My eyes are here and here. The right eyeball is on this one. The left one is looking at 59.74. Why? Because we do know that we have some resistance levels at those turning points, okay? 1.13, this potentially can be a shark also. Sharks everywhere. Are we trading in the ocean or trying to ride the waves in the ocean? That sounds kind of cool. Anyways, this is a shark pattern also, coincidentally, Palantir, pretty much mimicking the levels on the S&P, I would say, and the NASDAQ. All equities are printing potentially a shark across the board, right? However, of course, stocks are more volatile, therefore, this is printing a new all-time high than the previous high. Therefore, we know, again, another retest. We already tested the 1.13 here, the failed wave, correction from the high to the lows. That was a significant move, 10% move. It doesn't seem much here based on this move on the daily, but if we measure the turning point, significant turning point can be perceived here, or we can take advantage of this move, short-term trend, okay? This will be their true test, my friend. The last leg of the move, okay, on the pattern will be if the 1.13 does not break any higher. I see the S&P now testing once again slightly higher, 59.77. We do know that we have levels 59.80 all the way to 59.90, okay, and of course 6100 if we go any higher. Once again, if we go any higher, the last leg for this pattern formation will be to anchor the ratios between the B and the D, that we do know that if the 1.13 is violated, the last leg of the move will be the 2.14, 135 on Palantir, or the 224 for potentially a shark. The last PIB extension will be here at 130. Psychological level, let's go into 140. Why? Because the markets like rounding numbers. 140. Let's aim between 135 and 140, potentially for resistance levels, okay? So this is what I see on Palantir. If we go any higher, we'll also have a higher high in the price action, as well as lower highs in the momentum indicators, okay? Not necessarily here on the daily, but I'm sure, quite sure, let's see, not completely sure, that the 3-day time frame potentially is printing, yes, a lower high. This is the moves. You can observe here. We have a minor move here. The highs to the lows, diverging, contradicting variables suggesting or negating the upward traction, but we do know that when there is more selling pressure, all of these technical arguments can only perform or can actually underperform, okay? However, they're giving us warnings, or they're giving us a sign of a warning, potential turning point before maybe a correction. We're entering key turning points, in my opinion, in the markets. These patterns are major on the weekly, okay, extremely overvalued conditions. But let's see how high can we go, right? Do we go to 10,000 on the S&P? I'm not sure, my friends. But we have the patterns. But let me execute a short here because I'm itching to do it. I'm gonna let you guys know how these trades go. If I lose or not, that'll be on me. Do not copy what I do here, okay? I'm gonna put a TP on to start here. 1,000. Still. Let's go. Wish me luck. Everyone, thank you for being here. I'll see you guys on the next one. And remember to live a life. One second, I did not place my orders yet. There you go, executed. Everyone, I'll see you guys on the next one. I'll let you know if I exit this position at a loss or at a minor move, okay? Currently in the negative is always the case, but let's see if we have some room to go at these levels. 59.59, we'll see. I hope each one of you are doing great. I'll see you guys on the next one. And remember to live a life with an attitude of Gratitude, my friends. See you guys on the next one. Cheers.